Welcome to the Deep Dive. Want to really get ahead in understanding the market? Make sure you like and subscribe to Stock Analytics AI over on YouTube. They've got great in-depth analysis.
Yeah, definitely worth checking out.
And for you listeners right here, Stock Analytics AI has this cool offer for just Euro 4.99 a month. You can become a member and get prioritized deep dives.
So you just give them a ticker symbol.
Exactly. Suggest a stock, and they'll put it at the top of the list for their next detailed breakdown. All the info on signing up is in the description below.
Sounds like a good deal for staying informed.
Right. So today, we're jumping into NVIDIA, ticker's NVDA. I mean, everyone talks about them being right at the center of this whole AI revolution.
They really are. Huge player.
Yeah, and their stock price was hovering around, what, $134 back on May 20th, 2025. We've pulled together a lot of research links here in the description, as always, to really get under the hood of this tech giant.
Good stuff. So what's the plan?
Our mission today is basically to unpack the key parts of NVIDIA's business, look at their strengths, maybe some weaknesses, and, their future prospects, all based on the research we've gathered.
Makes sense. A comprehensive look.
And definitely stick around till the end. We'll remind you again about subscribing to Stock Analytics AI's YouTube channel for even more detailed video stuff. Okay, so let's kick things off. What is NVIDIA's business right now? It's changed quite a bit, hasn't it?
It really has. It's interesting, many people still think gaming cards first. And that's still important, but they've really shifted. They've become this full-stack computing infrastructure company.
So stack.
Yeah.
What does that actually mean in their case?
Well, it means they're designing and selling a whole range of stuff. Yes, the powerful GPUs, obviously, but now CPUs too. Plus, networking gear, the software platforms needed to run everything, even AI models.
Okay, so it's much broader than just chips.
Exactly. And that diversification, having these different ways to make money, is really central to how they operate now.
That makes a lot of sense. And looking at the numbers from their fiscal year 2025, which ended freaking January, wow, the data center segment just exploded, didn't it?
Exploded is the right word. We're talking, what, $115.2 billion? That's up 142% from the year before. Staggering.
142%. So that's their biggest segment now.
By far. It's all driven by this huge demand for AI training models, running inference plus high-performance computing, cloud services. It's like data centers are turning into AI factories, as they call it.
AI factories. I like that. And NVIDIA's right there providing the tools.
Precisely. And look at the Blackwell platform, their latest big thing. It pulled in $11 billion in revenue just in the last quarter of FY 2025. Shows how quickly the market jumped on it.
Right. So the demand is clearly there. Now, gaming is still significant, right? $11.4 billion, up 9% year over year.
Still very important, though. It's interesting you mentioned that. FY 2023 revenue was actually a bit higher, $12.46 billion. So a bit of fluctuation there.
Okay. And then there's professional visualization.
Yep. That brought in $1.9 billion, grew 21%. Pretty healthy.
And automotive. That one seems to be really picking up steam.
It really is. Especially that last quarter of FY 25 grew 103% compared to the same quarter the previous year. Hit $570 million.
Wow. Over 100% growth year over year in Q4. What's driving that?
It really highlights their push into autonomous vehicles with the Drive platform and also, the fancy infotainment systems you see in newer cars.
Got it. And even the sort of other category grew too.
Yeah, the OEM and other segment also saw decent growth in Q4. So the takeaway is data center is absolutely dominant right now, but they have their fingers in a lot of important tech pies, and those are growing too.
Okay, so definitely more than just selling chips. Let's dig into some of the key products. You mentioned Blackwell, the new GPU architecture. They called it the engine of the new industrial revolution. That's a bold claim.
It is bold, but it reflects the ambition. Blackwell is the cutting edge, building on previous architectures like Hopper and Ada Lovelace. It offers big leaps in performance, especially for AI tasks.
And outside of the data center, gaming.
Oh yeah, gaming's still core. GeForce RTX cards are the main thing. They use AI for features like DLSS that boosts game performance and reflex, which cuts down input lag. Gamers love that stuff.
I bet.
Plus, they have laptops, monitors, the GeForce NW cloud gaming service, the NVIDIA app, broadcast app, Lots going on there.
And back to the data center and cloud, it sounded like a lot more than just GPUs.
Oh, absolutely. It's whole systems. You've got DGX and HGX platforms built specifically for heavy AI work, then IGX for industrial edge AI, MGX for flexible server designs, OVX for complex simulations and digital twins.
Okay, so specialized platforms.
Right. And beyond GPUs, there's the Grace CPU now, their own processor, DPUs, which are data processing units for handling networking and security tasks efficiently, SuperNetties for high-speed connections, Spectrum-X Ethernet switches, and InfiniBand. It's a very complete networking and compute stack.
It sounds incredibly comprehensive on the hardware side. What about software? You hear about CEDA all the time.
Yeah. CDA is absolutely fundamental. It's their parallel computing platform and programming model. Think of it like the language that lets developers unlock the massive parallel power of NVIDIA GPUs for all sorts of complex tasks, way beyond graphics. It's really the foundation for a lot of AI development.
So CD is the key enabler.
It really is. And then on top of that, you have things like NVIDIA AI Enterprise, which is their software suite for businesses doing AI Workbench for developers, an API catalog, NIMS, NVIDIA Inference Microservices, which are supposed to make deploying AI models easier.
NIMS.
Yeah, and then specialized SDKs, software development kits for specific areas, like Riva for speech AI, Merlin for recommender systems, Morpheus for cybersecurity, Rapids for data science. They call their whole CDX library suite the language of accelerated computing.
The language of accelerated computing. That really emphasizes the software importance.
It does, and it highlights their strategy, which isn't just selling parts. It's about providing these integrated, full-stack solutions.
Right, the platform approach you mentioned.
Exactly. Hardware, software, networking, all tightly integrated. Especially for AI. It creates this seamless experience, but also, frankly, makes it harder for customers to switch away. And their whole mission statement, right? To solve problems that ordinary computers cannot. That sums up the value proposition. They're providing the heavy-duty infrastructure for the really tough computational jobs.
So with all this hardware, software, these platforms, where does that put NVIDIA in the overall market? They sound pretty dominant.
Dominant is definitely the right word, especially in AI GPUs. Estimates put their market share around 80%, maybe even hitting like 88% in early 2024, according to some sources.
80 to 88%, that's huge.
It is. And in the data center AI chip market specifically, they held something like 65% in 2023. Their market cap reflects this. We mentioned it was around $3.3 trillion back in May 2025. That scale is immense.
And analysts expect that dominance to continue.
Many do. TD Cowen, for example, projected they'd keep about 90% of the GPU market for AI. Now, in high-end gaming GPUs, it's more of a shared space, mainly with AMD. They both hold over 90% combined there. But across the broader accelerated computing landscape, NVIDIA's influence is undeniable.
That kind of scale must give them some serious advantages, right?
Oh, absolutely. Huge economies of scale in R&D. They spent over $12.9 billion in FY 2025 alone. That's massive. It gives them leverage when negotiating with manufacturers like TSMC, better marketing reach. It creates this sort of, virtuous cycle.
But it probably also attracts attention.
Definitely. More regulatory scrutiny, for one. And it really motivates competitors to try and find ways around them, develop alternatives.
Okay, so let's just try to nail this down. If you had to summarize what NVIDIA does and how it makes money right now.
Okay. Fundamentally, NVIDIA is a full-stack accelerated computing company. They design and sell the hardware GPUs, CPUs, networking gear, and the critical software and AI platforms that make it all work together.
And who buys this stuff?
Their main market right now is the data center space. That's where the explosive AI demand is, so that's driving the huge revenue. But they're still big in gaming with GeForce, professional visualization with RTX and Omniverse, and the automotive sector with their D-Drive platform is growing fast.
But data center AI is king for now.
Unquestionably. That's the main engine driving their recent phenomenal growth.
All right, let's shift gears a bit and talk about the people running the show. Leadership is crucial. What can we say about NVIDIA's management?
Well, you have to start with Jensen Huang. He's been the CEO since the very beginning, 1993. That's incredibly long tenure in tech.
Yeah, you don't see that often.
Right. And he's been central to everything, navigating them through a near-death experience in the early days, pioneering the GPU as we know it, making those huge strategic bets on HPC and AI, and, of course, driving the development of CDA.
So a real visionary founder CEO
Absolutely. The awards he's received, Best Performing CEO, IEE Founders Medal, Time 100, on multiple times they speak for themselves. And the recent financial results under his leadership, that massive FY25 revenue and profit jump, they underscore his capability. His strategic vision and apparently deep technical grasp seem absolutely key to their success.
Okay, leading in good times is one thing, but how have they handled crises? That often tells you a lot.
They've definitely hit rough patches. Back in the mid-90s, they were apparently about 30 days from going bust. Huang had to make tough calls, layoffs, focus everything on the Ryvie 128 chip. A crucial investment from Sega helped pull them through. That experience apparently led to an unofficial motto: "Our company is 30 days from going out of business."
Wow. Keeps you focused, I guess. What about more recently?
Well, the failed ARM acquisition was a big one. They tried to buy ARM Holdings, faced huge regulatory pushback globally, and eventually had to scrap the deal in 2022. That was a major strategic pivot that didn't happen.
But their business kept booming anyway.
It did, which is remarkable. Then there was the GeForce Partner Program, or GPP, back in 2018. That caused a big stir.
I remember that. Accusations of being anti-competitive.
Exactly. The idea was that partners got benefits for exclusively aligning their gaming brands with GeForce. It led to backlash from the community. Tech press and regulators started looking into it. They eventually canceled the program.
So they backed down on that one.
Yes. And going back further, the GTX 970 graphics card had that VRAM issue around 2014-2015. The specs weren't quite advertised correctly regarding how the memory worked.
Right. The 3.5 GB plus 0.5 GB thing.
Precisely. That led to accusations of false advertising, a class action lawsuit, a settlement where they paid buyers $30 each, and eventually a public apology from Jensen Huang himself.
Okay. And there have been more recent allegations, too.
Yes, ongoing ones. Reports about potentially scraping copyrighted videos from places like YouTube or Netflix for AI training data, apparently without explicit permission. And then more recently, in May 2025, accusations from Gamers Nexus about potential pressure on reviewers regarding which metrics to use.
So a bit of a mixed bag on crisis handling. Resilience, yes, but also some issues that raise questions.
I think that's fair. They've shown they can weather storms and change course, like with GPP. But some issues, like the GTX 970 or these newer allegations, have definitely dented their image at times and raised questions about transparency or practices.
Which leads nicely into communication transparency. How open are they, especially when things get tricky?
Well, they have all the standard formal channels: earnings calls, investor presentations, SEC filings, the IR website. They talk about having a robust two-way dialogue with investors. And they have things like their trustworthy AI commitment, which implies transparency.
But in practice, during those controversies,
That's where the criticism sometimes comes in. The GPP rollout wasn't handled with great clarity initially. The GTX 970 response took time. And the responses, or sometimes lack thereof, to the more recent allegations on data scraping and reviewer pressure are still under scrutiny. It suggests that while the formal mechanisms are there, proactive and really candid communication during difficult times isn't always their strongest suit.
okay. And what about their overall ethical reputation? Do the actions match the stated principles?
They definitely state strong commitments: ethical standards, corporate governance, human rights in the supply chain, trustworthy AI. They have a code of conduct, AI principles covering things like privacy, safety, transparency.
Yeah.
But then you have the controversies we've talked about. GPP looked anti-competitive to many. The GTX 970 involved misleading specs. They paid a $5.5 million SEC fine for not adequately disclosing how much crypto mining was boosting their gaming GPU sales back in FY 2018.
Wow.
And then the ongoing data scraping and reviewer pressure allegations.
So there seems to be a potential gap sometimes.
It appears that way, a potential disconnect between the publicly stated ideals and some of the actual business practices or decisions made along the way. And maintaining that ethical standing, that trust, is pretty crucial long term, especially for a company this influential.
So let's bring it together. The key question for management: are they honest, capable, and shareholder-oriented?
It's okay. Capable. I think the evidence is overwhelming. The innovation, the strategic pivots like into AI, the market dominance, the financials it points to, incredibly capable leadership.
Shareholder-oriented.
Largely, yes. They've delivered huge returns. They do share buybacks, pay a dividend, even if the yield is low. Governance structures seem to favor shareholders' engagement, performance-based pay. long-term value creation is undeniable.
And honest.
That's the more nuanced one. They have the formal communications, the ethical statements. But the controversies, GTX 970, GPP, the SEC fine, the recent allegations, they've definitely led to questions about complete candor and certain practices. Settling the lawsuit and the SEC fine shows some accountability, maybe. But the ongoing stuff continues to test that commitment to transparency and, well, honesty.
Right. Okay, let's pivot to the financials themselves. Numbers don't lie, as they say. What's the financial health picture look like?
The picture looks exceptionally strong. I mean, the market cap we mentioned, around $3.3 trillion, that's huge. The PE ratio, normalized, was around 45.
Still high, but maybe justified by growth.
Exactly. It's actually lower than its 5-year average because earnings have grown so fast, and the revenue growth itself, 114% year over year in FY 2025. And FY 2024 was up over 125%. The growth has been phenomenal.
Incredible numbers. What about profitability?
Margins are fantastic. GAAP gross margin around 75% in FY 25, operating margin over 60%, net margin over 55%. These are well above industry averages. Q4 net margin was over 56%, just really, really profitable.
With the balance sheet, debt.
Very healthy. Low debt to equity, somewhere around 11-13%. They have way more cash than debt, like $43 billion in cash versus maybe $8.5 billion in debt as of January 2025. Very conservative structure.
Free cash flow?
Strong and growing rapidly. Q4 FY25 free cash flow to equity was over $15 billion. That's 40% margin right there. Estimated full-year FY25 FCF was projected around $59-60 billion.
Yeah. And price to book.
High, around 42, but again, that reflects the market betting heavily on future growth, valuing the company far above its accounting book value.
So, bottom line on financial health. Is it profitable with a strong balance sheet?
Oh, absolutely. Yes. Hugely profitable, expanding margins, fantastic returns on equity and capital, very low debt, tons of cash, massive free cash flow. Liquidity looks great. Financially, they are in incredibly strong shape.
All right, that brings us to the second half of our deep dive. We've covered the business, management, financials. Now, how is the market feeling about NVIDIA? What's the sentiment out there?
Overwhelmingly positive is the short answer. It's really all about their leadership position in AI. The sentiment is strongly bullish, with most expecting earnings to keep growing rapidly.
But there must be some caution, too.
Oh, sure. There are definitely whispers about whether this incredible growth can last forever, concerns about the high valuation, is it sustainable, geopolitical risks, especially with China, and of course, competition heating up.
Right.
We saw some volatility earlier in 2025, remember, tied to potential tariffs, China export worries. But the stock bounced back. Overall, it's seen as the premier growth stock right now. There's even speculation about it becoming the world's most valuable company.
And what are the professional analysts saying? Do their targets match that bullish mood?
Generally, yes. Most analysts are bullish. You see consensus ratings like moderate buy or buy on platforms like MarketBeat or Public.com. The average price targets they list, like $165 or even up to $224 depending on the source, suggest significant upside from where it was trading in May.
But there's a range, you said.
Yeah, quite a wide range, actually. Some targets are closer to $100, others go way above $200, even potentially over $500 in some very optimistic 2025 projections. So while the consensus is positive, individual analysts have different views. Big names like Citi, Morgan Stanley, BofA are generally positive, buy overweight. But you do see some underperform ratings too, like from Raymond James, often citing those potential headwinds like export rules.
Makes sense. How has recent news impacted things? Is it feeding the optimism or adding caution?
It's been a bit mixed, but probably net positive, or at least feeding anticipation. The big focus recently was the upcoming earnings report, expected May 28th, 2025. Lots of hope pinned on the Blackwell ramp-up, showing strong results. The tariff and export restriction news, especially regarding the H20 chip for China that caused some jitters, there was talk of a potential $5.5 billion charge. But then there was positive news, too, like the reported removal of some AI diffusion rules.
Okay. Bit of push and pull there.
Exactly. And then you have news about strategic investments in the U.S., partnerships with companies like Foxconn or Humai. That reinforces the leadership narrative. But always, there's awareness of the competition, AMD, Intel, the big cloud players doing their own chips. That's a constant backdrop.
Let's look under the surface a bit. Short interest, options market.
Right.
What can that tell us about sentiment? Are lots of people betting against NVIDIA?
Not really, based on the data from around late April 2025. The actual number of shares shorted wasn't particularly high relative to the trading volume. The days to cover was very low, like around 1 day. That's just not many big players were making large negative bets.
Okay, low short interest generally.
Right. Short borrow fees were also low. Now, looking at the options market around mid-May 2025, things were interesting. Implied volatility was up a bit, maybe ahead of earnings. The volume put-call ratio was actually below 1, meaning more calls, bets on price increase, were trading than puts, bets on price decrease. That's usually seen as bullish.
More calls than puts, bullish signal.
Typically, yes. The open interest put-call ratio was closer to neutral, maybe slightly leaning towards puts overall. But for the near-term options expiring soon, especially around the earnings date, the volume put-call ratios were lower, again suggesting more short-term bullishness or hedging activity ahead of that event. Expectations seemed high for a potential post-earnings rally.
Got it. Okay, let's talk about who actually owns NVIDIA. The ownership structure can tell you a lot, right?
It really can. And the big story here is institutional ownership. Around 66%, maybe a bit more, of NVIDIA stock was held by large institutions as of April 2025.
66%. So mostly big funds, pension plans, etc.
Exactly. Think Vanguard, BlackRock, Fidelity, FMR, State Street, Geode. These giants own huge chunks. Vanguard had nearly 9%, BlackRock almost 8%. This high level usually signals strong confidence from the big money managers in the company's long-term prospects.
Did their holdings change recently?
Minor shifts. Looks like Vanguard and BlackRock might have slightly increased their stakes in Q1 2025. FMR may be trimmed a tiny bit. Goldman Sachs apparently boosted their holdings significantly. But overall, the picture is one of strong institutional conviction, and it means these big players have a lot of potential influence.
What about insiders, management, the board? How much do they own?
Insider ownership is much smaller, maybe around 4% or so, depending on how you define it. CEO Jensen Huang is the biggest individual insider by far, holding maybe 3.5% personally, though some sources calculate it higher, including options, etc.
Still a significant stake for him personally.
Oh, definitely aligns his interests. Looking at recent transactions like March 2025, you see mostly sales or dispositions by Huang and other top execs like Colette Kress, Tim Teeter.
Selling? Is that a bad sign?
Not necessarily. A lot of these were listed as non-open market, which often relates to exercising stock options and selling shares to cover taxes, or part of preset trading plans, 10b5-1 plans. Insiders sell for many reasons: diversification, financial planning, especially after the stock has run up so much.
Okay, so not automatically a red flag.
Right. Over the last year leading up to May 2025, there was more insider selling than buying overall. But Huang's large stake remains a key factor.
So institutions hold the vast majority. Is the ownership concentrated?
It's concentrated in the sense that these top institutions hold significant blocks. Vanguard, BlackRock, FMR each own over 5%. The top 25 shareholders probably hold less than half the company, though. So while institutions collectively have huge influence, 64-68%, there's no single controlling entity, and there's still a very large public float shares available for trading.
How does this ownership structure influence corporate governance? How the company is run?
Well, NVIDIA seems to have a pretty standard, arguably strong governance structure on paper. Most of the board is independent. There's an independent lead director. Key committees are independent. They have shareholder-friendly things like annual director elections, proxy access.
So they seem responsive to shareholders.
They state they engage with major shareholders annually. Executive pay is heavily tied to performance, and shareholders have generally approved their pay packages, say on pay. The board oversees risk management. They have the code of conduct, the AI ethics commitments we talked about.
And does this translate into good performance?
The financial performance certainly suggests the governance hasn't hindered success. Strong growth, profits, returns, low debt, that looks good. However, going back to the controversies, how they handled GPP, the GTX 970 issue, the SEC fine, the recent allegations. That's where governance effectiveness in terms of upholding ethical commitments and ensuring transparent responses gets tested. Good governance isn't just about structure, it's about practice, especially when challenged.
Right, the follow-through matters. Okay, let's pull everything together now with a classic SWOT analysis. Strength, weaknesses, opportunities, threats. What are NVIDIA's biggest strengths?
Okay, strengths. Number 1, dominant market position. AI, data center, high-end gaming. 2, the CUDA ecosystem. That's a huge competitive moat, very sticky. 3, relentless innovation, backed by that massive R&D spend. 4, strong brand recognition. 5, exceptional financials growth, margins, cash flow, balance sheet. 6, visionary leadership with Jensen Huang. And 7, strong strategic partnerships.
That's a powerful list. What about weaknesses? Where are they vulnerable?
Biggest one is probably dependence on TSMC for manufacturing their most advanced chips. That creates supply chain risk, geopolitical risk. Second, the really high stock valuation. If growth slows even a bit or they miss expectations, the stock could correct sharply.
Makes sense. Any others?
Yeah, competition is definitely heating up. AMD, Intel are getting more serious. The big cloud companies designing their own chips is a threat. Lots of AI startups, too. Regulatory risk is another big one. US-China trade, export controls can really impact them. Potential for broader supply chain issues due to global instability. And increasingly, environmental concerns about the energy use of GPUs and data centers.
Okay, weaknesses noted. What about opportunities? Where could they grow or expand further?
The biggest opportunity is just the continued massive growth of AI and machine learning everywhere. Every industry wants in. Expanding data center infrastructure globally is key. More demand for high-performance computing. Autonomous vehicles is a huge long-term play.
New markets, too.
Potentially. Expand into things like the metaverse, using their tech for digital twins, maybe even quantum computing tie-ins down the line. Monetizing their software stack more NIMs, AI enterprise could add significant recurring revenue and stickiness. And they could benefit from things like the CHPS Act, government incentives for domestic manufacturing. Plus, strategic acquisitions are always possible.
Lots of potential upside. Finally, threats. What are the major external risks they face?
Competition intensifying is the big one, could lead to price wars or losing market share. Technological disruption and someone inventing a completely different, better way to do AI compute is always a possibility in tech. More regulation, antitrust scrutiny because of their dominance, evolving export controls, data privacy rules.
Geopolitics again.
Absolutely. US-China tensions are a constant threat to supply chains and market access. A major economic downturn could hit spending on their products. Security vulnerabilities in AI or ethical blowback regarding AI development could hurt them. Reliance on intellectual property from others could lead to lawsuits. And just finding and keeping the best engineering talent in such a hot field is a constant battle.
Okay, that gives us a really good picture of the landscape. So wrapping up this deep dive on NVIDIA. It's pretty clear they're a leader, maybe the leader, in this AI boom. Their tech, their ecosystem, their financials are incredibly strong.
Definitely. But as we saw, they operate in a really dynamic space. Lots of competition, significant regulatory hurdles, and even some questions around management practices and transparency that have come up.
So here's a final thought to leave you with. Given NVIDIA's absolutely central role in driving the future of computing and AI, what are the bigger, maybe less obvious second-order effects? What are the impacts of their technology on society, on the economy, that we should really be thinking more deeply about?
That's a great question. The ripple effects could be enormous and touch almost everything.
It's something to chew on. Now, if you found this deep dive helpful for understanding a complex company like NVIDIA, please do subscribe to Stock Analytics AI's YouTube channel. They have tons more detailed video analysis and research like this. The link is right there in the description.
And just a reminder for everyone, everything we talked about today is based on research available up to our recording date. It's for informational purposes only.
Absolutely. Not investment advice. AI analysis has limitations, relies on available data. Please do your own research.
Thank you for joining us for this deep dive. You can find links to the sources discussed today in the description below. If you have ideas for future topics, feel free to let us know.